Welcome to your own channel, Romance with Finance, a brand of Financial Freedom Hub. On this channel, you get the videos and information related to personal finance.
Love to read books? Go and grab this book on mutual funds. Click on the below link and grab your copy today.
In the previous video, we learned that whenever we invest in a mutual fund, we purchase mutual fund units at the applicable NAV, that is net asset value. And when we redeem those units, the applicable NAV determines the value we receive. However, have you noticed something? Buying and selling isn't something unique to investing. It's a part of our daily life. We buy groceries, we buy clothes, we buy mobile phones. Sometimes we even sell our old phone or old cars. Buying and selling happens all around us. Investing also follows the same principle. The only difference is instead of buying products for consumption, we buy investment instruments with the hope that they will help us create wealth in the future. In the stock market, we buy and sell shares. In mutual funds, we purchase units at the applicable NAV and later we redeem those units. However, here's an interesting question. Whenever we purchase an investment, where does it actually go? Does it come to our bank account? Does it remain with our broker? Or is there another place where it is safely stored? And if mutual funds are also investments, do they follow the same process? Or is there any difference? To answer these questions, we first need to meet the three invisible helpers working behind every investment transaction. One moves your money, one helps you complete the transaction, and one keeps your investment safe. Imagine your sister's wedding is just a few weeks away. Your family decides to buy a beautiful gold necklace. The necklace costs 2 lakh rupees. Now, before you can buy it, what is the first thing you need? Money. You transfer 2 lakh rupees from your bank account to the jeweler's account in order to get that jewelry, or you withdraw that money from your bank account in the form of cash so that you can hand over that cash payment to the jeweler for that jewelry. That's our first invisible helper. It's the bank account. The job of a bank account is simple. It moves your money. Whether you are receiving your salary, paying your bills, or making an investment, your money usually travels through your bank account. Now, when you reach the jewelry showroom, you don't walk into the vault where all the jewelry is kept. Instead, you meet the salesperson over there. You tell them which necklace you would like to buy. The salesperson checks its availability, prepares the bill, accepts your payment, and complete the purchase. Have you noticed something? The salesperson didn't manufacture that necklace, nor will they keep it safely at your home. Their responsibility was simply to help complete the transaction. Think of that salesman as your trading account. Your trading account doesn't store your investments. Its primary role is to facilitate buying and selling of financial instruments. Now, when you come home from that jewelry store, would you just leave your diamond necklace casually on your table or bed? No, of course not. You will place it safely inside your locker. The locker protects your jewelry. Now, let's travel back a few decades. Before Demat account existed, investors didn't receive shares electronically. Instead, they received physical share certificates. These certificates were proof that they owned shares in the company. But imagine the problems. What if the share certificate was lost? What if it was stolen? What if it got torn or mutilated? What if it was damaged in a fire or flood? Or imagine shifting to a new house and accidentally misplacing it. Even transferring ownership involved paperwork and could take days or even weeks. Managing investments wasn't as convenient as it is today. To solve these problems, shares gradually moved from physical certificates to electronic records. And that's exactly why the demat account was introduced. Today, instead of receiving paper certificates, your shares are credited electronically to your demat account. Think of this as your digital investment locker, wherein your investments are kept safe. It is safe, it is fast, and much easier to manage. Let's quickly recap. Whenever you purchase shares, your money moves from your bank account, your trading account facilitates the purchase, and your shares are stored safely inside your demat account. Three different accounts, three completely different responsibilities. Now let's come back to mutual funds. If mutual funds are also investments, do we need all three accounts here as well? This is where many beginners gets confused because the answer is not necessarily. Now let's assume you decided to invest your money directly through an asset management company or through a financial advisor or through mutual fund investment platforms. In that case also the money will still leave your bank account just like it did earlier. However, instead of purchasing companies shares, since you are purchasing now mutual fund units at the applicable NAV, those mutual fund units would be maintained in something called a mutual fund folio. They don't necessarily have to be stored inside a demat account because you are purchasing mutual funds offline. When you invest in mutual funds through offline mode in such scenario, they are maintained in the records of the fund's registrar and transfer agent. On contrary, if they are invested online through demat account, then the units are stored in a demat account. This implies that for millions of mutual fund investors, opening a demat account is not mandatory. However, there is another option. Some investors prefer holding their mutual fund units in dematerialized form. In that case, the folio is not created. The mutual fund units are credited to their demat account just like stocks. So both methods are perfectly valid. It simply depends on how you choose to hold your mutual fund investments. Understanding investments isn't about memorizing terms. It's about understanding how the entire system works. We'll continue building that understanding in the next video. Till then, stay tuned. Hope this video was useful to you and you have learned something today. If yes, then